Health insurance. Right now, it is crazy. Every day things change. And so every day things are changing in the health insurance market. Every time I have something great for a client, especially a business, and lots of other businesses start to latch on and do that, all of a sudden HHS or somebody else says, you know what, we want more taxes, and that hurts us on taxes or revenue or whatever. And so next thing you know, it changes. So health insurance is literally changing every day. I've had one major thing change 4 times in the last month that pertains to businesses. So that's how crazy it is. So some of the stuff I'm saying today, when you watch this online, it may be different. Therefore, I'm going to go ahead and throw out the caveat after watching this presentation. Any questions you have, please contact me, because what I'm saying today may be different. It's not my fault, but it may be different by the time you've watched this. So it is very important to keep up to date, have a broker, insurance agent that's up to date, and contact me, preferably. Love to talk to you. So that goes for all of you here in the audience. As you're making changes, making decisions, please do contact me, because things do change constantly right now in my market. So, question, why did I choose to do health insurance? It's such an exciting thing to do, after all. Well, this kind of ties along well with what Dr. Dan just said, and it says a typical male living in the United States has a better statistical chance of either winning a Super Bowl ring or an Academy Award than they do of reaching age 65 without being diagnosed with diabetes, hypertension, or heart disease. And that came from a chiropractor, one of your colleagues, actually. It's from his website. I saw that. I'm like, I'm stealing that. I like it. So, but that's one of the reasons why. Here's another reason, just a fun reason. It says you were right. People don't land on their feet. So why do I do health insurance? Because it's crazy right now. People need somebody that specializes in health insurance. If you're going to a financial advisor, you don't want one that also sells car insurance probably, and that also has does something not even in the insurance world. You really want somebody who focuses on financial advising. Well, right now, life insurance, the wrong decision 1 year can mess you up for years. I have a client that didn't listen to me, and he's now out thousands and thousands of dollars and has no health insurance for his family, just because he thought, I'll wait another week to get something done. And I said, you need to do it today. He didn't, and now something happened to his daughter and they can't get insurance and he's out thousands of dollars. So you want somebody who focuses on health insurance when you're talking about getting your health insurance for you, your company, for family members. So why is health insurance so confusing? My own personal opinion of why it's so confusing. Right now it's being changed constantly, and who's changing it? People who don't sell health insurance, people who don't have medical licenses, who don't have a background in medicine. Rare occasion, a politician or two may be a past or current doctor, but that's rare. And they're the ones making the decision. So in my personal opinion, one of the reasons why it's so confusing is you have people that know nothing about it deciding what to do about it. That's not getting political, just saying that's why it's so confusing. Don't get mad at your insurance agent. And don't get mad at the insurance companies. It's not always their fault. They're doing the best they can, hopefully. So what I wanted to let you know is I'm kind of gearing this towards 3 main audiences all at one time. I'm doing my best to present it to 3 main audiences. So here are my audiences. Number 1, self-employed people with no employees or immediate family. So you have a spouse, a child, working for you. That's kind of one audience. Another audience at the same time I'm going to be talking about is employers with 49 or less full-time employees. And then lastly, people that work at a company. So this isn't just for employers, for self-employed people. It's also for people who work at a company that want to get some questions answered. Whether their company does or doesn't offer health insurance, they still have questions. So this presentation is also geared towards them. So I'm going to go through just a review or just a little prequel of what I'm going to be talking about here. So some of my topics are how being healthier can save you money. Applies well with Dr. Dan, who just spoke. And so how being healthier can save you money. Also going to be talking about the key changes in the law. I'm going to cover just some of that because I could spend hours on it and it's boring. so I'm not going to do that to you. Also, the fines, the tax, there's another term I'm going to tell you for it when we get into that. And then some more changes to the law. Your options if you have no major health issues. There are options out there. When I was introduced by Cynthia, she mentioned that I'm her agent. Because of her good health history, I was able to save her a lot of money. So if you are in better health, there are things you can do that can save you a lot more money, and I'll talk about that. And then some other ways to save money. Qualified life events, that's very important to know. That's a big deal right now. Qualified life events. Should you stay grandfathered? You may know what grandfathered means, you may not. I'm going to talk about that and whether or not you should or shouldn't. What to do this year. This is June of 2014, for those listening online. What to do this year and what to wait and do next year. I'm going to talk a little bit about that, give some suggestions on that. Other options available to businesses, and what I mean by that is, this is what we're used to, but there's new stuff. Should you work with a broker? Some people don't want to work with a broker. They think it costs them more money. So should you, shouldn't you? How to choose a broker. And then, so now I'm going to kind of get into a little bit, start with my presentation. Kind of showed you some of the things I'm going to be discussing. So once again, my three main audiences for this presentation, I'm going to put them back up there, is self-employed people. My major, most of my clients are people that are self-employed. That's a large majority of my clients. The other niche for me is people who are in between jobs. So my husband changed jobs. We don't have insurance for the next 2 or 3 months till his insurance starts. That's another niche for me, which would be this third one, employees of a company. I need insurance for right now. I have a lot of clients like that. They're on the books for 1, 2, 3 months. I give them the same attention, the same help, and often a lot more help is needed for them than the business owner, because they're like, what do we do for 3 months so that our kids are safe if something happens? That's a niche. And another one that I've really been focused on a lot lately, that I'll talk more as we get going, is those companies of 49 or less employees. Now, I will say that doesn't mean I won't take care of a company with 50 or more employees. I will. That's a whole different world. Therefore, I'm not talking much about how healthcare applies to them. That's a one-on-one conversation. Because this company and this company, there's a lot different things that apply to them. And so that's why I'm not really focused on them today. But I do still work with companies over 50 employees. But one of my niches, because it's really tough on companies that are 50, that have less than 50 employees starting as they're renewing this year. And so I'm really focused on how to help them so that they can get past some of the hurdles that they're going to have if they don't have help. So how can being healthier save you money? Well, Dr. Dan talked about a lot of the aspects of being healthier, how some of it's genetic, some of it's your decisions. And so one of the things that you can do that can save you money, one of the biggest ones is that in most cases, whether it's health insurance or even life insurance and other insurances, but especially health, in most cases, you're going to pay 50% or more for your premiums. Just off the top, right off the top, you're going to pay 50% more. So instead of $500 a month, you're going to pay $750 a month for what your neighbor next to you is paying, who's the same age, same zip code, so on and so forth. So right off the top of the bat, smoking. And the rules right now with most health insurance companies through the Affordable Care Act plans is 6 months or less, and it kind of varies on their wording on how much you can use tobacco and whether or not it's because of a Native American ceremony that can get you exempt from that higher price as of right now. I'm assuming it'll stay that way, and so there's different wording, but tobacco usage is a big one. Another big one is DUIs can impact, just so you know. And so there are just different things about living healthier. Obviously, some of the ways I'm going to show you to save money as we go are going to be these other types of plans that are out there. And one of the biggest knockouts is obviously diabetes. So that's a big one. Diabetic, it breaks my heart when I talk to somebody. I say, so how healthy are you? You know, especially if I'm talking to them over the phone, they got referred to me and they call me or I call them. Oh, I'm really healthy. Okay, so no diabetes. Well, yeah, I've had diabetes for 10 years, but I'm healthy. And, oh, okay, well, what's your weight? And they tell me their weight and I'm like, okay. And I've had a heart attack, but I'm good now. They call that healthy. I've had that. Some of you are looking at me like, seriously? Yes, I've had that. All kinds of stuff. But diabetes is a big one. Obviously, being heart healthy. So go back and watch Dr. Dan's presentation to learn a little bit more about that. But heart issues, those are some of the things if you keep yourself healthier. So on the cheaper options, the weight questions, it's not anymore about height and then weight. We used to have to figure out if you're 6'10 or 6'1, you know, it's different height and weight. Now it's if you're a man, under 300 pounds, you're good in most cases. If you're a woman, under 250 pounds. You could be 6 foot, you could be 4 foot. They don't care in most cases for the ones that matter about height and weight. I'm going to throw that caveat out that, yeah, so some of you are like, really? Yeah, you could be 4 foot and 249. You get the same, grace as a woman that's 6'5 and 249. And it's not right to the 6'5 woman. And I've had them mad at me before, tall women. I'm like, that's the rules, sorry. I don't make them. So I'm going to kind of go over some of the key changes. The law, the long name of the law is the Patient Protection Affordable Care Act, also known as the ACA, Affordable Care Act, also known as, and this is a politically charged term, but also known as Obamacare. Some people like that term. Some people think it's rude. Some people don't care. Some people only know it. Some people think that ACA and Obamacare are two different things, by the way. They don't know that it means the same thing. So there's different names out there for it. I'll kind of use it interchangeably while I'm talking, so know that whichever one I use, same law, okay? So upon implementation, a handful of Obamacare provisions significantly added to the premiums that individuals and families felt in 2014. These requirements include the guaranteed issue change, which means you can have diabetes, you can have AIDS, whatever, you can still get insurance. And it covers it. Once your policy starts, all that stuff is covered. And also community rating, essential health benefits. So they did a community rating based on a little bit different than they were doing it before without getting complicated. And then essential health benefits. So there are key things that are essential. One of my favorites, I can now have a baby and I'm covered if I have an ACA plan. I can. My wife obviously can, but I can too. Yeah, I needed that coverage, didn't I? Some of you are like, nuh-uh, yes, it's true. Men are paying for maternity coverage even though they don't need it. Because then it makes it fair to the women because we're paying the cost of their maternity care instead of just them paying it. And that's the philosophy, is we're sharing the rate. So yes, taxes, some other fees on plans, drugs, and also the taxes on medical devices. That's a big one. That was some of the fight involved. Some of these last few right here was people saying, well, it's not fair to these companies. And the philosophy was, who cares about the companies? We only care about the people, which is good, but in the end, who pays for it? The people. So a lot of, that's some of the changes there. And once again, I could talk for hours about it and not even be a third of the way done. So I'm going to skim through here. Here's some of the things that have happened because of Obamacare, ACA type plans in other states where they implemented some rules before we ever had this. So, and the reason why I'm doing old stuff is because we've only had Obamacare implemented for less than a year. The big expenses, the big changes, and some stuff still hasn't gone into effect. They keep pushing it back. Therefore, it's not really fair to say, here's the changes, here's how it's affected people when we've had less than a year. You know, Dr. Dan would probably say doing a medical test or a medical study, you don't want something that's only this much time. So therefore, I didn't do this stuff. That's the reason why I didn't do that. If you want me to give you one-on-one some of my thoughts and what I've seen, I will do that. And I'll throw a little bit of that out there during the presentation. But in 1993, a 30-year-old male and female in New York paid, on average, annual premiums of $1,200 and $1,800 respectively. Once again, more expensive for women. 1 month after passing Obamacare-like reforms, the premium skyrocketed to $3,240. See a difference? For some, premiums increased by 170%. So that's how it's impacting. We're talking a lot about financial side in this presentation. So financially, this is some of the big impacts. Many of my clients, one of which is in the room, I was able to get in before Obamacare new prices hit and was able to get them till the end of this year, much cheaper rates. If I rewrote that same person today, they would be paying 50 to 100% more if I wrote their rates today because of what I can and can't get for them based on the new rules. So big differences. Some other things here, I got Kentucky. Average premiums jumped between 36 and 165% after Obamacare-like reforms were enacted. Insurance providers dwindled to just one. This is Kentucky. And most people under the age of 50 will see their rates increase significantly. That is coming from Oliver Wyman Consultants. And on what they think, that's their own opinion, but they're professionals in this. That's what they think will happen because of the ACA. So just knowing out there, rates are going up. Coverage is better, but rates are going up. So you need to do things to save money. So that's, like I said, one of the main purposes here is to figure out ways to save money. So in this presentation, there's so many things I could talk about. I tried to come up with a streamline, this order, this comes after this. I finally realized that there's so many things that come after each other. It's going to feel like I'm doing popcorn because I just couldn't really do that. So you kind of know, you might be like, why did you do this next? Just so you know. So the ACA fines. They are also known as, this came from healthcare.gov, so I had to copy and paste it because I loved it. The individual shared responsibility payment from the Internal Revenue Service. Fine, tax, whatever you want to call it. This is what they call it on the healthcare.gov. And I literally cut and pasted everything in blue because it wouldn't let me change it. So everything in blue is literally from healthcare.gov. I just added the because I'm a former teacher and I couldn't handle a fragment. And I didn't want to give you the really, really long thing before it. So individual shared responsibility payment, responsibility. So we all have an individual responsibility payment. So if you're not having ACA, you're going to, ACA qualified plan, starting next year for some people, this year for some people. And that, once again, is a good one-on-one conversation to tell you if it applies to you this year or not. We'll talk more about that as I go too. But you're going to have that. So here's the penalty. This is important to know. Penalty in 2014 is calculated one of two ways. You will pay whichever these amounts is higher. Very important to see that. Whichever is higher. So either 1% of your yearly household income or $95 per person for the year, $47.50 for children. Okay? That's this year. The way the penalty is calculated, a single adult with household income below $19,650 would pay the $95 flat rate. And then once again, the lower amount for the children. And a single adult with household, and of course, I just said with children, this is a single person, so ignore that. But a single adult with household income above $19,650 would pay an amount based on the 1% rate. If income is below $10,150, then no penalty is owed. So that's also important to know. For those that are below a certain amount, then penalty doesn't matter anyway. They don't have to worry about it. So the point is, it can be pricey, but not too painful this year.
That's if you don't take the health insurance.
That's if you don't have an ACA compliant plan that has all the bells and whistles, excluding certain people, which we'll talk a little bit about that in a minute when I get to that. So, but don't worry, the fines change in 2015. They get higher. I love this. I found this the other day. But they get higher, so your piggy bank's going to get hit even harder. So the penalty increases every year. In 2015, it's 2% of income or $325 per person, whichever is higher. That's next year. 2016 and later years, as of right now, the way the law is written today, it's 2.5% of income or $695 per person, all because you don't want to have insurance that the government says you have to have, which was written by people who don't sell insurance, don't have medical licenses, and in most cases didn't really talk much to people with medical licenses that sell health insurance. They decided this. So just so you know that. Not trying to be political, but make sure to talk to your politicians if this matters to you and say, you need to talk to people and get some changes made, please. After that, it's adjusted for inflation. So it will start being adjusted for inflation, which is a fancy way of saying it will keep going higher. Okay? So can you get out of them? Now, I'm going to tell you right now, I won't answer specific questions on this as it pertains to you today, unless it's private one-on-one, and even then I may say, let me get back to you. So just so you know, you can ask me a question on this, but I won't answer it because it's individual person and it changes, and that's the other reason why I'm going to be careful what I say, because this is being videotaped, because it could change tomorrow, definitely next year. So are there ways to get out of it? Yeah, there's ways. There's a bunch of different exemptions. I'm going to mention a few of them, but not all of them. So you may qualify for an exemption, and this is just some of it, if you're uninsured for less than 3 months of the year. So for 10 months of the year, you have an approved plan, but for 2 months you don't, then you can get exempted from the fine. So you're good there. Lowest price coverage available to you would cost more than 8% of your household income. So in other words, it's too expensive. The lowest option for you, for your family, would be more than 8% of your household income. You can get exempted. You don't have to file a tax return because your income's too low. So that's where that number earlier, the 10,000 something, came in if your income is too low. You're a member of a recognized religious sect with religious objections to insurance, including Social Security and Medicare. Okay? And I won't say the religions, but there are some that have, from what I heard, got a little bit of an increase in membership because of people wanting to do this, which is sad, but apparently that's supposedly. I don't have any proof of that, but I've been hearing it. But there are objections for that can get you exempt. Also, another one is that you're incarcerated, so either detained or jailed, and not being held pending disposition of charges. That's just some of the reasons that you can get out of the fine. There are a lot more that I can talk to you about one-on-one. In most cases, with most of my clients for this year, if they don't have an ACA plan, in most cases, I have a legal way to get them out of the fines. I want to clarify that. It's legal way, because I only do legal way to get most of my clients. Some of them I can't. But for most of my clients, I am able to get them out of the fine for next year. Beyond that, right now, it's going to be harder after next year. As the fines get higher, it's harder. Great news, right? So, your options if you have no major health issues. This is important to know. There are options out there. So whether you're perfectly healthy or pretty healthy, the big knockouts, once again, are the over 250 pounds if you're a woman, over 300 pounds if you're a man. Those are important in most cases. For most options out there, it depends on state. It's a little different per state. But also heart issues, diabetes is a big knockout. So if you don't have diabetes and you're under either 250 if you're a woman or 300 if you're a man, there's more than likely options out there for you. Blood pressure and cholesterol may or may not be an issue depending on your situation there. But for most cases, I can get you covered. Nothing pre-existing would be covered. Most neurological, psychological disorders would also be a knockout. So bipolar and that kind of stuff. So I want to clarify that, but not all of them, some of them. So once again, that's a good one-on-one discussion on your situation that I would tell you, okay, you'd be fine. No, you wouldn't be. But if you are healthier, there are options out there. There's term plans. Depending on your state, the government has said that certain plans can be there. They don't like them, but they're letting, so far they haven't made them illegal yet. And so we have in the state of Missouri, for instance, a 6-month short term. It's term insurance. So I can do a term plan for you. It lasts for 6 months. It costs you anywhere from 25 to 60, 70% cheaper than a plan with a higher deductible, more out-of-pocket coverage, so it ends up costing you more. Plus, it costs you way more per month on an ACA plan. So you're going to have a better plan. It lasts for 6 months. Then in 6 months, If you're still healthy, we just renew it. So your deductible starts over. The negative is at the end of 6 months, your deductible starts over, your max out-of-pocket starts over. But when you're saving a fortune, it's worth it. The negative is, as of right now, you have to pay the fine unless there's a way for me to get you out of it if some of the things fall in place for you. But even if you have to pay the fine, my family, if I had to pay the fine for my whole family, be under $500. I have 2 kids this year. So if you're saving $300 to $400 a month times 12, but you pay a $500 fine, is it worth it? And you probably have better insurance too, with probably a better network in some cases. It's worth it. So there are options out there if you have no major health issues. There's a lot more. I'm just covering some of them for now. Other ways to save money. So some of the ways you can save money is, I'm going to go back to the health side. Being healthier will save you money. Some other ways, there are safe, legal, I always want to throw that out there, I only do legal, safe, legal ways to save money on your medicines. Whether you have an ACA expensive plan that does still cover your medicines, or if it's an ACA plan that doesn't cover your medicines, there are safe legal connections I can help you make with places to get your insurance, to get your medicines cheaper. That's a big thing. You may be able to get it for free from the actual person who makes the medicine, from the straight from the company. So there's different options out there, and I can help you with that. I won't make any money off of helping you, but I help you because that's what I do for my clients. And so there are ways out there to save money on prescriptions. There's some of the other things to know that some people don't realize is, as great as it is to go to, and I'm not going to say the names of places, but the corner pharmacies that are open 24 hours a day, those are great. However, if you're paying for your medicine outright, whether it's because you have no insurance or because you have an HSA plan or one of the new ACA plans that don't cover anything until you hit $6,350 in expenses per person, if you're doing that, there's other stores that you can go to that are not just pharmacy stores and save a lot of money because they buy more in bulk and all that, so they have better prices. And they're not there just to make money on prescription. A local pharmacy may end up being cheaper for you too. Depends on your pharmacist. You never know. So there are ways out there, and I can help you with that. And a good broker will be able to tell you in order, go to this store, this store, this store, this store, in this order, 9 out of 10 times, the cheapest medicine's here, then here, then here, then here. I'm not going to say it because it's being recorded, and I don't want to give advertisement, but there are ways out there. That's one of the many ways that I can show my clients how to save money, and a good broker shows their clients how to save money. And to clarify, just in case somebody doesn't know what I mean by the term broker, I want to go ahead and let you know, in case you don't know, that's the way of saying that I don't just work for blank insurance company. I can sell through this company, this company, this company, this company, not just through blank. So qualified life events, this is important right now if you need to roll over to a new plan during in between open enrollment times. And so qualified life events are important. This is just some of them. There are many more. I didn't want to give you pages and pages. But here's some of them. A return from active military duty, release from incarceration, gain of immigration status or citizenship, and permanent move to a new state. That's just some of them. There was originally belief that if you just moved to a new zip code, that would be considered. And from what I understand now, that's not allowed, which that was exciting because I was like, how hard is it to move if you're a single guy and you just want to get a new plan, or you're a single woman, move to a new apartment, From what I understand, that is no longer allowed. We thought it was till they clarified. And that, like I said, this is just some of the many things. Other things are involuntary loss of minimum essential coverage due to discontinuation of a current plan that does not meet healthcare reform requirements. For example, when a non-grandfathered individual major medical plan is discontinued and replaced with a metallic major medical plan. Also legal separation, divorce, termination of domestic partnership or civil union. And there's an asterisk there because as far as I understand that also depends on state. Change in full-time employment status. And that may or may not get you to be able to make changes. It all depends on the situation on each of these too. So once again, it's still very individualized. It's hard to say yes without doing the research for your specific case. I've had some before where I thought was a no-brainer, it was going to be counted, and without being very specific and telling the insurance company why they changed, they were going to be denied because the insurance company had to hear certain key words. So that's important to know. I just mentioned the word grandfathered. What does grandfathered mean? That means if you have one of the old plans that were in place before the law was passed back in early 2010. So if you had a plan and it's grandfathered, you know it. If you don't know if your plan's grandfathered, it's probably not. If you made any change in your plan from that time to now, any change, then it's probably no longer grandfathered. And that happened to a lot of people who thought they were grandfathered, and they weren't because their insurance company talked them into changing their deductible or doing this or doing that. And so now they've lost their grandfathered status. So should you say grandfathered? If you're grandfathered, that means you have the old plan. If you have the old plan, some of the new stuff that's included, such as once a year wellness exam for women and for men, and then whatever tests your doctor says and the government says you should have for that year, then you get done and it's covered. Those aren't on most of the old plans. As far as I know, they're not on any of them, but there's probably one out there that has it, so I don't want to say that there isn't. But on average, no, it's not on there. If you want to be able to pay a little bit more, maybe less, and still have that covered, then it's worth it. And the reason why I say maybe less is that what we're seeing is that a lot of these grandfathered plans are getting higher rates and higher rates and higher rates. They keep hitting them as soon as they're allowed to based on what the contract said when they signed. They're hitting them with 10%, 20%, whatever they're allowed to do based on the contract. They're hitting people with these rates, trying to get them to switch to the new plans. So not all companies are doing that, but some of the big ones that have a lot of self-employed people are doing that. And so that's very important to know. It's also important to know that if you're self-employed and you have one or two companies, there's a good chance that anything that happens on the job, so an accident on the job, will not be covered if you have certain plans. Once again, a good reason to talk to a broker that knows what they're doing, that works with lots of companies, so a broker and not somebody that only works for blank. Because there's a certain company that will not tell you that until you file a claim and say, oh yeah, it was work-related, and then they deny it. So, once again, not saying that publicly, but I'll talk to you privately if you want to ask me one-on-one. So what to do this year and what to wait and do next year. Okay, this applies even more to businesses than it does to individuals. And so on an individual basis, you may not need to make a change, but in many cases, I have what I termed the July jump. And for some of my clients, it's much smarter and cheaper, this year especially, next year too probably, but this year especially, it's a lot smarter to change plans in July to a 6-month plan, then they're covered the rest of the year. Even if something major happens later in the year, they're still covered, and they can't lose their plan, and they can move to an ACA guaranteed issue plan next year if needed, but then save $200, $300, $400 a month on a plan, and probably have a lower deductible, and probably have a lower max out of pocket. So if something horrible did happen, they're only out this much, plus they saved this much, so it's a win-win. So I am recommending, based on individual situations, that for some people that is better. Once again, that's for the healthier crowd who can get the better plans. So for some people, stick with what you got. For others, talk to me or your broker about whether or not you should make, as I call it, a July jump for this year. Hopefully the fines get lowered for the future years, and then I can keep talking to people about that as a potential for them every year in July. Some states, they can do it in February because they can do an 11-month policy. Right now, well, I won't say which states, but right now there are states that are 11-month. Not a lot of them, but there are some. Some really close to us, by the way, geographically. And then for businesses, there are a lot of things they need to do this year and a lot of things they need to do next year. And I'm going to talk about the business side in just a moment, so I'm going to skip that for now. Other options available to businesses. Okay, I didn't put it up here, so for those of you listening, you're going to have to listen. You're not going to see it. For those of you in the room here, if you will look at the sheets that I gave you, you have this sheet right here, which those of you listening from home, all you have to do is email me, and my info will be up here, but Shane at shaneismyagent.com. Shane is spelled S-H-A-N-E. So Shane at shaneismyagent.com, and I will send you any flyers that apply to you. So here's some of the things that businesses are dealing with. There are a lot of changes that as of right now will go into effect for 2015 that were supposed to go into effect this year, but due to different reasons, I think mostly political, but due to different reasons, they were postponed until next year. And so when these changes go into effect, they will hit a business owner hard. Businesses will end up paying even more than they were paying before. Right now, the top, and this is on here, it says some of the top expenses for business owners right now, you got labor, so paying the people, and then you have the rent, the mortgage, and then somewhere third, fourth is probably health insurance. It's highly expected that within the next couple of years, health insurance will be the number one expense, not wages. And if it is still wages, then it's a better company that has high wages. But it'll be number two in most cases at the least for most companies. Maybe three if they have high rent because they're in Silicon Valley or something. But health insurance is going to go up. Whether it stays in the same place or not with that company's expenses, the price is going to go up. So for businesses, what I brought here is a sheet that kind of talks about some of the options that are out there. Once again, for those over 50 full-time eligible employees, they don't have the same options. They do and they don't, but there's still options out there for them, but they'll have to pay the fine if they do some of the options. And the fine right now is around $2,000 an employee. We'll see if that changes. But for those that are under 50 full-time employees, there are some great things out there. So what you can do, the old world and what some companies are still doing because they don't know there's new options out there, is they're still doing the group plan. So I have 20 employees, I offer one, maybe two options, and whether you're 22 male, perfectly healthy, or 64-year-old female that's had 3 surgeries, has diabetes, you pay the same price. That's the old world way. The new way to do it that I recommend for most companies, for some no, but for most companies, is to do individual plans. And the brief on this is what can happen is a business owner can set up with some help from me and from a company. There's different ones out there, so I'm not going to name any of them, but there are companies out there that will set up plans for them. Depends on the company and what fits on which plan, so I won't say what the different options are. But there's different plans out there. We set up a plan for them. The business owner can put money in that plan every month. In some options, they can vary it based on the executives get this much a month and the entry level get this much. Other options, it's all got to be the same. So it depends on which option they go with, but they can put money in every month, then that's all they have to do. They pay a little bit of a fee, depending on the company, how much the fee is, but a little bit of fee per employee or per year, depending, and that's all they do. And then myself, or whoever their broker is, goes in, works with that company that the money's being sent to, and I set up employee number one with this plan because they're 22-year-old male, no kids, no wife, no plan for one anytime soon. And he's perfectly healthy, but he plays a lot of sports. So I give him a plan that fits that, where he owes nothing or a couple $100, $250 if he has an accident, and then if he had a heart attack or some other, health type thing, not an accident, then he may owe $2,000 or $3,000, whatever. There's an option for him. And then you have your low-paid employees, too. They may be able to get subsidy help. Now, that's the thing that's changed 4 times in the last month, 3 or 4 times already. So that's very specific to the company if we can get that. If we need to try to get them subsidy help, which is a fancy way of saying the government pays part of their insurance, if we need to get that for them, then I will have to figure out if we can make it happen or if we can't. They've been changing that on us. But also, so some of the things is you got the lower rates for the younger employees. You got the employee that needs the maternity coverage, and you have the employee that doesn't. I can do the maternity coverage for the one that does, and they'll pay more but they have the money from the company. But the company's not having to charge this super healthy guy who doesn't have any kids or is done having kids and doesn't need maternity coverage and his whole family's healthy. Don't have to charge them more to cover this guy who needs kids or this person with diabetes. So it offers a lot more flexibility, but even more if you're the business owner. So business owners, if you do not have to be the one that says, by the way, here's the only option we have this year and it costs you this much. You don't want to do that. And you don't want to be the one that has to pick, well, for this employee, I know they would love this plan, but because we're so small, we can only do one. Or we can do two, but even then, it still excludes this one or two employees out of these two options. You don't have to do that anymore. I do that. Your broker does that. You just say, I'm putting this much money here. Here's Shane's number. Call Shane, or Shane will be available in the break room all this week. Set up a schedule with him, whatever the case is. And so that works so great for business owners. So that's one of the new options, one of many, but that is the best option for those especially under 50. Even those over 50 employees will probably start doing something like that because they'd rather pay a $2,000 fine than $17,000 a year in health benefits, which is what it's expected to project to eventually for the average employee. So they will set up debit cards and all kinds of stuff for the employee to use for their expenses and do all kinds of stuff for them. So here's another thing. Self-employed businesses are not subject to PPACA, this is the long-term restrictions governing businesses offering health coverage. So what does this mean? It means self-employed businesses can continue to use an individual policy without fear of a penalty. They can run the cost of this policy through an HRA program without restriction. This is a huge win for self-employed businesses. Now, they've been trying to take this away. So at the present moment, as far as I understand, this is true. It may be true a year from now. It may not be. So this is when we talk, we'll figure out if it still works for you. So why work with a broker? I think I've told you some of the reasons why. Because if you're doing it on your own, you're going to do what you know instead of here's the new options out there. So that's the easy. They can save you time, they can save you headache, and they can deal with your employees and not you, or deal with your cranky wife because you didn't listen to her and pick the plan that she wanted you to get. He'll be the one dealing, and I say that from personal experience. And then I get the wife to see, oh, this really is a good plan. Okay, never mind. Or the husband. It's not always wives. So how to choose a broker? Pick somebody that knows what they're doing. I'm partnered with a group of over 400 brokers across the country. We have won all kinds of awards for being the top producers from some of the biggest names in insurance companies' names. Therefore, we know what's going on because they like us, so they let us know ahead of time stuff. I get lots of great training. So somebody that knows what they're doing, but also has a support. I left being an independent guy. I still have my own agency name, Saunders Insurance Solutions. However, I'm partnered with a team of over 400 people all over the country. Pick somebody that knows what they're doing with support. That's how you pick a broker. Someone who's honest. If you ever get a feeling they're dishonest, that's why I always stress, when I tell people I have ways to save money, I always stress the word legal because that's important to me. I don't cross lines. Pick somebody that you're not worried about because they're not going to be the one paying your fines when the IRS comes after you or when you go to jail. So recap, the more you know and the more honest, intelligent help you get, the better off you'll be. Health insurance is complicated, so let a professional help you with it. Please, that's what we're paid for. And by the way, you don't pay us anything, just so you know. It comes from the insurance companies. So once again, I'm Shane Saunders with Saunders Insurance Solutions. I specialize in health insurance. Therefore, if you work with me or somebody like me that specializes in health insurance, then hopefully you'll be well taken care of. And it's a crazy world out there in health insurance, so let us help you so it's not crazy for you. So